let's not kid ourselves. This cycle is a bit different than most people had hoped. Or rather, it's also a bit different from previous cycles. And that's why there's simply a certain level of uncertainty. I often sense this in the comments, which is actually understandable. Today we'll look at what is really different here, what might even be better, and what might have a negative impact. Basically, we have the 4-year cycle, and accordingly, most cycles run somewhat similarly. However, there are always a few things that differ between each cycle. In this cycle, we have a huge advantage, and that is the Bitcoin ETFs. Nearly $110 billion are in this market for that reason alone. It's a huge advantage. These Bitcoin ETFs, here we simply have more institutions that find it easier to invest. And we also see the demand. Currently, it has risen sharply again. The downside to this, however, is that we only have money for Bitcoin. This is also somewhat the reason why some think there will be no more Bitcoin cycles. I do not share this opinion. I think the ETFs are simply an additional factor. On top of that, there will still be an altcoin season. But that is a major advantage. We really have institutional investors and big money here. Even just with Michael Saylor, we have a huge lead this time. Saylor was around back then too, but in comparison. What he bought back then compared to now is incomparable. Completely different sums. The banks are much friendlier. The banks nowadays give Saylor much more substantial loans. And he is making significant purchases with these loans. Those are major differences. We have a US government that is more crypto friendly than ever before. The US is the most important country, and we have this country on our side. That is extremely positive. Just imagine, in the last cycle, we still had the SEC fighting against the crypto market. And the whole world just wasn't quite there yet, crypto open. And yet we still tested this Fibonacci zone from the all-time high. In 2017 to the bottom, if you draw the Fibonacci zone there, we reached those price targets. And if you apply that to the current situation, we would need to reach at least $8.5 to $11 trillion in this cycle in the total crypto market. Because in this cycle here, we also reached this Fibonacci zone. But at that time, we had far from any regulatory clarity and essentially just a battle against the crypto market. Now we have regulatory clarity, everyone is becoming more crypto friendly, and accordingly, one can already imagine that these could be minimum price targets. And that would be really positive. If things go well, we could even rise significantly above that. What is also quite questionable is this thing. The first crypto quarter was extremely bad. For Ethereum, it was almost the worst first quarter we have ever seen. That's quite intense, even though Ethereum is now so large. Actually, that's quite atypical, and it shouldn't be like that. The year after the halving is usually extremely positive in the first quarter. Currently, it has started well, but let's wait and see the end of this second quarter. That means in terms of time and data, when you compare it with the past, we have been running a bit differently since the beginning of the year than we had imagined, and actually a bit differently than what would be usual. Nevertheless, there are of course time data. In terms of time and data, it has always taken 17 to 18 months after the halving for us to see our all-time high. It was the same in 2017 and 2021, and this time it could of course be the same again. That means we would see our Bitcoin all-time high around October or November of this year. Reach. That means in terms of timing, we are still in a good position. In terms of timing, it was also the case in the past that we set a certain all-time high, then performed a bit worse during the summer months, and then performed a bit better towards the end of the year. Let's see if it will be the same this time. What we also have again this time is an expansion of global liquidity. We see fresh money coming into the markets. That was the bull run in 2017, and here is the M2 money supply. The M2 money supply increased rapidly, which allowed us to escalate here as well. And above all, this was positive for Bitcoin. 2021 in the bull run, exactly the same. A lot of fresh capital flooded the markets, and we definitely felt that significantly. Currently, we have also been rising very rapidly again, which is very, very positive. And based on this calculation alone, because we have risen so strongly now, we should be at the altcoins in relation to the M2 money. Approximately. Price targets of at least $150,000 can still be seen because we currently have such a large expansion of money. These are extremely exciting and important facts that need to be considered here. Of course, we have a few things here that are running a little differently. But overall, it still looks quite similar to the past in relation. Of course, it also depends on where we set the bull run top, but I simply rely on this 4-year cycle. Now, of course, the question is, when and which altcoins should one buy nowadays? First of all, it must be said that there are now over 11 million cryptocurrencies. This means that even in this cycle, it is not as easy as it was in the past to invest in alts, it is significantly harder because we simply have many more altcoins. And the liquidity has not increased accordingly. This means the same amount of liquidity, but this liquidity has to be distributed across more altcoins. This is a big problem, which is why I think not every altcoin will simply perform as they did in the past. No, this time targeted projects will rise, and they can certainly rise well. But it's no longer the case that you just have to invest everywhere, and it already works. That used to be the case, but it won't be like that in this cycle. What is important here, however, is the narrative and a unique selling point. That's what you should pay attention to with an altcoin. And regarding the narrative, I tell you, this is very interesting. These narratives here are extremely important. The Arhuwa narrative, the iDeep narrative is very important. And if you have connections to the US government or to Coinbase, that makes a project significantly more attractive, significantly better. These are the things people pay attention to nowadays. In the past, people didn't pay much attention to such things, but now it's important that a project ideally even comes from the USA. And ideally, it really fits into the narrative somehow, is a bit special, and ideally also has good connections. In this regard, Wall Street has completely taken over here, and some things have changed a bit. But it's not fundamentally the same. The system is actually still quite similar. There are just a few new players, a few new actors in the market, but in the long term, things are actually still the same here. I am and remain optimistic about the future. Time and data speak for themselves. Macroeconomically, our situation is also improving due to the M2 money supply. Why should I be bearish here? B? I can also imagine that the summer months will be a bit quieter. Nevertheless, I still expect this next final rally by the end of this year. And then this cycle would have unfolded just like the 2017 cycle. I mean, geopolitically, macroeconomically. The foundation has simply been laid here in the last few months. It looks more and more promising, it looks better, it looks good that we will have a loose monetary policy this year, that we will see further interest rate cuts. And that was something many considered impossible. But now, 3, 4, 5 interest rate cuts have already been priced in just this year. Things can move so quickly, it will definitely be very interesting. I hope this video has provided you with value, and I would be happy if you support me, of course, in the form of a like and a comment. And then, until next time, friends, bye.